Hey guys, my name is Michael Chin, and in this video, excuse me? Dear valued client? Okay, well I guess in this video we'll be talking about options assignment. I'll be letting you guys know what this sucker is all about, telling you how to avoid it, and what to do in case you do encounter options assignment. Alright, but for real guys, don't panic. Options assignment is not something to be afraid of. You can easily clean it up and there'll be no harm done. Alright, let's get to it. So what is options assignment? Well, first of all, let's remember that an option is a contract that guarantees the buyer 100 shares of the underlying equity at the option's strike price. So if the buyer ever chooses to exercise his contract, then the shares need to be delivered to him. Unfortunately, that means that if you were the writer or the seller of the option, that means that you will need to be assigned shares to fulfill this agreement. Well, what does that look like? Well, let's look at the two situations that you might run into. So first would be selling a put. So let's say you sold a put. All right, so you wrote out a contract to sell one put at, let's say for Microsoft, you sold a put at the 150 strike price. And Joe Schmo over here buys your put. So he buys this put and you are over here selling the put. Well, when he wants to exercise this, then he will be delivered 100 shares of Microsoft. And since he bought a put, he's actually going to have short shares, right? So he's going to have short shares. So he will be short Microsoft with 100 shares. So it's actually probably better to put a minus sign here because he is short the stock. And then on your side, to balance this out, you will be assigned 100 shares of Microsoft, all right? So you will be long Microsoft. And then the other case is the opposite. So like let's say you sold a call and you sold the call at the 160 strike and the same person buys it from you. Well, when they want to exercise this option, then they are going to be assigned 100 shares of Microsoft at $160 each, and then you will be assigned 100 short shares of Microsoft at $160 each. So if you sold a put, when you get assigned, you are now long the stock. I mean, you were still long the stock when you sold the put, right? And same thing for a call. When you sell a call, you will now be short Microsoft with 100 shares. Okay, so now that you know what happens when options assignment hits you, let's talk about when it's going to happen. Well, it can happen anytime you sell an option. So if I were to come here in the options chain and I were to sell a call or I were to sell a put, then I'm at risk, right? The buyer has the right to exercise it whenever they want. But if it's just going to happen randomly out of the blue, that basically never happens. There's like a 99.99% chance that that'll happen to you. In my years of trading, I've never been assigned randomly like that. But there are two key events when you are at risk of options assignment. And that's going to be when your option is close to expiring. And when I mean close, that's like within the hour of expiring, or on a day when the underlying is paying out dividends. So let's look at the first situation, which is when an option is expiring. All right, so if you bought an option and it is in the money, so that means that if you bought a call, your strike price is less than the current price, or if you bought a put, your strike price is higher than the current price. And that means that you have some intrinsic value in your option, then your option will automatically be exercised. Okay, so if you bought that option, you hold it through expiration, it's going to be automatically exercised. Well, what's that mean? that means that the writer on the other side is going to be automatically assigned. So if you are holding a sold option and it is in the money when expiration happens, right? So for normal stocks, expiration is going to be on the date of your options chain, right at market close. So when that happens, you will be automatically assigned. You'll get one of those ugly emails that you saw that I got. And then the next morning, you should wake up with the appropriate shares in your account. That means if you have any in the money options that you sold, whether they're naked or they're part of a spread, part of a butterfly vertical, whatever it is, make sure you buy them back and cover them before expiration happens, or else you're going to wake up with options assignment and you're going to have to deal with it. Now, that might be part of your strategy, but as for me, I don't have any strategies that deal with options assignment on purpose. So I always try to close mine out before that expiration hits. Now, what's the second case where you have a high risk of options assignment? Well, that's going to be when a dividend payout is about to happen. So every quarter, some companies may decide to pay out a dividend. And if that's the case and you have a sold call, well, then the buyer of that call option may decide to exercise so that they get the dividend payout. This gets a little weird because not all call options are going to be exercised. It kind of depends on how much the call option is worth at the time and if it's more valuable to grab the dividend or to hold on to the call option. I'd say this one's a little weird. I have been assigned on it once, but remember, don't panic. It's not a big pain if you do get assigned, but when you do go through dividends, just be a little careful. Sometimes I even decide to just close out my sold options if I see a dividend coming because I don't want to deal with that risk. But at the end of the day, we have to remember that we're all human and sometimes we just get options assignment. Now remember, don't panic when you get assigned options. I want you to remember, number one, that when you're assigned options, there is no additional losses at settlement. Okay, so let's take a look at that situation. Let's say you sold this put on Microsoft, the 160 put, okay? So let's say you sold it for 170. Now, let me get to a clean screen here and we can actually draw this out. So we sold one Microsoft put at the 160 strike and we sold it for $1.70. That means that we take in $170 immediately. Okay? And let's say Microsoft, so it's trading at 158.96 right now. Let's say it continues to go further. So Microsoft is now trading at $155. And let's say this is at expiration. Well, now that Microsoft is trading at $155, the value of the put will go up. And let's say, for instance, it goes up to $5. All right, so to cover this option, we are going to have to pay $5 or $500 to buy it back. All right, so if we pay $500 to buy it back, then that means overall we are going to be at a $330 loss on this trade. Now, on the flip side, if we decide to get assigned on it, then we will get assigned 100 shares of Microsoft at $160. That means that each one of these shares, since Microsoft is trading at $155, has lost us $5. So if we multiply this by 100, that means we take a $500 loss the moment these shares are delivered to us. Now, this doesn't seem right? When we get assigned, we're down $500, but when we buy back the option, we're only down $330. Well, you also have to remember that since the option was exercised, we no longer have to buy back this option, so it just expires worthless, and we retain this $170. So we will add the $170 that we gained here. This is a minus. And that means that in this case, we also lose $330. So if you look at both of these examples, example 1 and example 2, both cases, we lose $330, which means that at settlement, it doesn't really matter. There's no extra loss because we got assigned, and there's no extra loss because we didn't get assigned. But there is the risk of exposure. Now that we did get assigned 100 shares of Microsoft, we are now long Microsoft, which means that if we wake up the next morning and Microsoft is now trading at 150, which means it went down even lower, we're going to lose another $500. But on the flip side, you also have the luck of Microsoft rallying. Let's say it rallied up to $165 the next morning. Well, then you just made money on your assigned options. You made another $500 with that $170 that you got initially from selling the contract. So it works both ways. It's exposure risk now, but remember, there is no additional settlement losses. Now, you won't get any settlement losses when it comes to options assignment, but the thing that you will get affected by is the increased margin. So if we take a look at this 160 sold put here, we can see that it takes up around $3,000 worth of buying power for my account. But if I were to get assigned on this put, then I would instead have 100 shares of Microsoft at $160, and that would take up around $5,000 worth of buying power. So it's almost double the margin that I need to hold this position. And if that ends up exceeding my account, then that becomes a problem. But normally what happens is if you do end up getting assigned on a position that overly exceeds your account, TD Ameritrade will step in and actually liquidate your position because they don't want to be held responsible for it if something bad were to happen in the markets. So if I were to hold, 100 of these sold puts, and then I was to get assigned on all of them and it would just take my account out of control, then TD Ameritrade would come in and immediately liquidate my position as soon as it got assigned. All right, so I hope you understand now that options assignment is not something that you need to be afraid of. There's no need to panic. You haven't lost any additional money because of this email that you got sent. All that it means is that you have some added exposure and some added margin that you need to take care of. So what's that mean for you? Well, first thing in the morning, you need to close out of these positions. There's no reason to have them on. They're just added risk at this point, and you want to clean up your mess and move on to the next setup. And that's it for this video. I hope you learned a thing or two about options assignment. If you have any additional questions about this, please feel free to comment below and I'll be happy to help. I'll see you guys at the next video.